Meanwhile, a surge in deals sweeping the U.S. healthcare industry this year, with acquisitions up from $182 billion in 2014 to more than $400 billion in deals in 2015 year to date. Joining me right now to talk more about that is Wedbush Managing Director Scott Smith. Scott, good to see you. Thanks so much for joining us.
Good to see you.
You are just off of the Wedbush Healthcare Conference.
Right.
What happened at the conference?
Well, it was pretty exciting. One of the big announcements was Google announcing a partnership with Dexcom, the marrying of tech, high tech and med tech together, which generated a lot of excitement. And compared to prior years, market caps have really risen. Equity markets have been accommodating, and there are quite a few biotech companies that have multi-billion-dollar valuations that we really haven't seen for a while.
Why is healthcare so exciting? I mean, I want to get your take on it too, because you're sitting there on the desk seeing all the money moving into healthcare and all the deals happening as well. Todd, what do you think is behind this surge in deals in healthcare?
Yeah, so there's better science. If you look back 10 years ago, I would say the science was good, but it wasn't quite where we are now. There's a lot of new chemical entities that are out of the market. Particularly in biotech, companies are able to target disease problems directly, so target cells, and that's led to an accommodating FDA, reduced risk from the investor perspective, and of course with very low interest rates and risk on trade around, it's really helped the equity markets.
I think also the mega deals that we've seen in the space are because of Obamacare, right? The insurance companies, the Cignas, right, the health nets, and that kind of thing.
That's definitely driven insurance. You have to
drive. And I think also the fact that the big data, right? Again, you have Google. If we gave Elon Musk and Sergey Brin the money that we spend on Medicaid and Medicare, the billions of dollars.
They'll do a better job.
Do you think they could do a better delivery system?
I do.
Right? I think they can. So what's going to happen is eventually, because of big data, we're going to have the whole country flat, and you're going to have insurance through every state. So it's not going to be just a carrier in New York, a carrier in California. So then what's going to happen, you're going to have a compression on all the costs are going to go down astronomically, because then it's not going to be a colonoscopy in California is going to be $5,000. It's going to be $1,500 in Nebraska.
So
now
market driven.
It's going to be everywhere.
The same.
It's going to be data driven.
We're also living longer. We're living longer.
Driven.
Craig Venter told me, he's the guy who mapped the genome 15, 18 years ago, and he said in the next century we're going to be living. in the next 10 years we're going to be living into our second century. That's pretty powerful stuff.
Yeah.
Well, it's interesting if you're actually able to take the data, do the analysis, and say, here's the real problem. It's not in the old days where we said it's chemotherapy, put a drug in a patient, hope you kill the bad cells faster. It's we know what the bad cells are, we go and we kill them, or we know what the pathogen is,
That's right.
We go and we kill it.
What about the story in the Journal today, Joe? The Wall Street Journal is reporting this week that there is becoming a demand for startups to build Uber-type health services. And there's a story this morning in an effort to put high-tech spin on an old-fashioned house. In other words, a house call from a doctor. It's sort of like an Uber. You pay just for that house call.
Yeah, one company, it's called Heal, and what they allow you to do is have a doctor come to your home for about $100, $200 a visit. And this is increasingly a trend in tech, at least in venture capital. So much money flowing into these healthcare startups that either allow you to kind of iron out the costs and deal with your Obamacare, in the case of Oscar, or you have Heal, which is on demand. So you have all of these new innovations that maybe will actually, in your case, drive prices down a little bit. But I wonder what you think of it as you look at all of the data in the broader sector.
Yeah, so again, we're more on the kind of the biotech, medtech side, but as I look at the provider side of things, that's sort of like the government of healthcare in many ways. It's inefficient. There's not a lot of technology. So I get excited when I see new business models develop that say, hey, we're going to take cost out of the system, because that's what it's about. It's about treating the patient better, but ultimately, if you can take cost out of the system, that's going to be the long-term driver.
And millennials prefer this type of care anyways, right? Who wants to make a doctor's appointment 6 months in advance and then have to take a day off from work?
Well, if you could see on your iPhone where the cheapest delivery system is, it's very easy. Why would you do it?
But the cheapest is at CVS. I'm sorry.
Real quick on biotechs, okay, because that group had run up so much earlier in the year. How are valuations today? Are we still talking about excess in the biotech space?
Yeah,
in terms of valuation.
Yeah, valuation. So I'd say broadly, I wouldn't comment on specific stocks, but broadly, there are pockets of overvaluation. I think there's pockets of undervaluation. A lot of what's happened is there's been an IPO. It's generated a lot of interest. Investors are focused. But in some cases, we're seeing companies in phase 3 with an interesting drug that are essentially forgotten. There's no research coverage. There's no volume, and investors kind of forget about it.
And you were going to make the point that the cheapest is in CVS because there's been a consumer
the clinics, you go there,
well.
they take your insurance. It's not a battle between a doctor and your insurance company. That's who can rip you off more.
I was talking about.
I understand what you're talking about, but I mean, it's just merger and acquisition.
Diagnostic
this is
testing,
cheap money.
not pharmaceuticals.
I think the consumer revolution going on in healthcare is incredibly exciting. You can go into a CVS or a Rite Aid and get so much stuff done.
That's right. If you can go for $40 and get taken care of.
Yeah. Scott, good to have you on the show today.
Thank you.
Thank you so much.
Thanks,
Scott Smith will be watching healthcare, biotech in particular, from Wedbush. Getting on a